Hey everyone, welcome back to Corporate Decoder, the place where we break down the big fancy corporate news and find out what's really going on behind the scenes. Today we're diving into Norwegian Cruise Line Holdings' latest filing, and let me tell you, it looks like there's a bit of a shake-up happening at the top. So get this, the president of Norwegian Cruise Line, David Herrera, has departed the company. It says here, it was part of a strategic leadership change, and the CEO, Harry Sommer, will be taking over his day-to-day duties for now while they look for someone new. Now, changes at the top can be a big deal. They can signal shifts in strategy or maybe even just a need for fresh blood to navigate tough times. This departure happened on August 20, 2020, 2020, 2020, 2020, 2020, 2020, 2020, 2020. Now, even with this leadership change, the company is putting out a message of stability. They're saying they're still aiming for their 2026 financial goals, those charting the course targets they mentioned. And importantly, their financial forecast for the full year 2025, the one they shared back in July, that remains unchanged. This is usually good news. It means they're not seeing the leadership change as something that will derail their upcoming performance, but of course we'll have to keep an eye on that. Just a quick reminder for context, Norwegian Cruise Line Holdings is the parent company for brands like Norwegian Cruise Line and Oceanic Cruises. Their ordinary shares are traded on the New York Stock Exchange under the ticker NCLH. Now, before we get into the nitty-gritty of the financials and risks, which is usually where the real story is, you'll see a whole section here about forward-looking statements. Basically, the company is telling you that a lot of what they say in this report about the future, like expectations for results and performance, are just that. Expectations for results and performance are just that, expectations. They might involve risks and uncertainties, and the actual outcome could be quite different. This is standard stuff in these filings. It's their way of protecting themselves legally if things don't go as planned. They're citing a specific law here, the Private Securities Litigation Reform Act of 1954, that's designed to give companies a safe harbor, meaning protection from lawsuits when they make good faith predictions about the future. They're also listing a bunch of factors that could affect their future performance, like economic conditions, fluctuating fuel prices, debt levels, and even public health crises. Remember those things, right? They make it clear that the cruise industry is really susceptible to a lot of external factors. And here's another important phrase they're admitting: there may be other risks that they don't even know about yet, or they consider them small right now, but they could still pop up and cause problems. This is why it's so important for us to dig into these reports instead of just taking the company's word for it. You know, they're trying to be transparent, but they also want to highlight the best case scenario often. Now, let's talk about something that definitely affects a company's flexibility, and that's their debt. Norwegian Cruise Line Holdings is highlighting their indebtedness and how the agreements for that debt have restrictions. These restrictions mean they have to keep a certain amount of cash on hand and meet key financial performance measures. Those are called maintenance covenants. They also mentioned that a significant chunk of their assets are being used as collateral for these loans. This means if they can't pay back the debt, those assets could be taken away. It's a big commitment, and it limits how they can operate their business. Another risk they're flagging is the simple yet significant issue of not being able to visit their planned destinations. This could be due to political issues, natural disasters, or even health concerns at those locations. If cruises can't go to the cool places people book them for, that's going to make for some very unhappy customers and lost revenue. And of course, they're bringing up public health crises again. This is a huge one for the travel industry. It directly impacts whether people feel safe and are even allowed to travel. Their ability to keep operations running smoothly and for people to want to book a cruise depends heavily on managing these health risks. They also point out their reliance on other companies to help run things. They're dependent on third parties for things like hotel management on some of their ships and other services. This introduces another layer of risk, because if those third parties falter or have issues, Norwegian Cruise Line Holdings can also be impacted. It's like having a chain where if one link breaks, the whole thing can suffer. Alright, so that's a quick look at some of the risks and the leadership change. The report is signed off by Daniel S. Farkas, who serves as Executive Vice President, General Counsel, Chief Development Officer and Secretary. Having a legal and development leader sign off can mean they are emphasizing the legal protections and strategic future of the company. So what's my take on this filing from Norwegian Cruise Line Holdings? On the positive side, they are projecting confidence by stating their 2026 financial targets remain on track and their 2025 guidance is unchanged, even with a leadership departure. This shows a commitment to stability and forward planning. However, the significant mention of their indebtedness and restrictive covenants is a major point of concern. It suggests their financial flexibility could be limited, which might impact their ability to react quickly to market changes or invest in new opportunities. The acknowledgement of various risks from economic downturns to public health crises and reliance on third parties also paints a picture of a company operating in a very volatile environment. They are clearly aware of these challenges and are attempting to mitigate them through strategic leadership. And by clearly stating these risks, the strength of the company moving forward will likely depend on their ability to manage their debt, effectively navigate external shocks, and find a robust successor for the departed president to ensure consistent execution of their strategy. It will be interesting. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.